What's going on, good people? Welcome back to another episode of the Bison Trading Show, coming at you live from the Bison Trading Labs. Once again, we are here for another great week live market analysis. You know how we do, giving you the best levels that you need to trade from and telling you and showing you how to break down these charts the proper way. If you don't know, I'm half of the Bison Trading Show crew. I go by the name of Ty Trades Futures. Of course, I'm here with my guy.
You already know, man. It is your boy, aka. I'm the D guy, Pearl Financial. Appreciate everyone who pulled up tonight. I love all of you guys. I hope you guys have your notebooks and your pens because we're pretty much going to go over some of the last levels we went over last episode. But of further ado, we're going to just hop right on in. Ty, let's go on and let's get busy.
All right, so this week we actually have some pretty interesting things going on in the market in terms of, at least for the pairs that I've been trading. I know in terms of US 30, we have some very interesting news that I know you guys are going to find very, very intriguing. So let's go ahead and get straight into it. Now, since it's the beginning of the week, you know we have to start with our top-down analysis. We start up here at our weekly chart to get the overall picture of the longer-term movement. So for the US 30, what do we see? We see that overall, the market has been moving up. But what I want to point out to you guys is the change and the potential trend, right? I want you guys to look at this candle from last week. Now, we can see that this is a long tail candle wick. That's true. But at one point in time, this was a completely bearish engulfing. Because if you imagine that the body was down here where the low was, this would have been a complete engulfing to the bear side, bearish engulfing. Very, very bearish signal, especially when you're so overextended in the uptrend. Usually leads to pullbacks. But you notice how this candle closed. We closed to the upside with a long tail candle wick. But a lot of times when you see candle wicks like this, it can mean one or two things. You either have a big move to the upside or a big move to the downside. Because sometimes when you see a long tail candle wick like this, you would expect prices to continue up. But in some cases, on the next candle, prices will come all the way back down to retest that wick that they started from, and that may potentially be the move that we're looking at for this week. So if we look at that move, that's 710 points, a very significant move that we could see this week. So keep that in mind. And then when we break it down to the daily chart, you'll see why I think that this week or the following months might be a little bit rough for the Dow Jones. It might be a cold summer. Because look at what we have right here. We have our first lower high, our first significant lower high that we've made in a long time. Now, one thing I want to tell you guys about me as a trader is that when I'm looking for reversals, this right here is my bread and butter pattern. Whenever I see something like this, it usually indicates that the market is heading lower. 70% of the time it does. And I want to show you guys a line chart to show you exactly how pronounced this lower high is. Now compare this lower high that we made to all of the other lower highs on the chart. They don't look like what we just saw. Most of the lower highs are just when the market kind of rolls over a little bit and then it just starts to fall as support levels get broken and stops get ran through. But if we look at this lower high that we made right here, that is very ominous for the bulls in this case. Anytime you have a lower high like this, I don't care what the trend is, you got to be cautious and you got to be careful because that right there is a clear bear sign. Now, don't get it confused and think that that's the beginning of the sell move and it's time to sell. We know with the Dow Jones that the bulls love to come in at the same time that the sellers are stepping in thinking that they can get a lot of money, and then the bulls like to come in and trick them out of their position and get in for the value price and ride it back up to the top, buy low, sell high. So anything can happen with the Dow Jones, so we have to be aware of that and keep our eyes on that. But whenever you see a trend, whenever you see a pattern like this, a lower high like this, that's clearly mispronounced, it's a bad sign. So these next couple of days will be very important. If we see prices continue to the downside, then this might start the next leg of a pullback. We could come all the way back down to the bottom of this low. This was the same price level that I was telling you guys about from the weekly chart earlier. So make sure you guys keep your eyes on that because that's very, very important. Hold on, you guys. 1 second.
You going in and out a little bit? Hello? You hear me?
Nah. Check your phone.
Check my phone.
So you guys, whenever you see this pair, you gotta make sure you stay aware. This can be a very telltale sign for heavy selling in the future. So just keep your eyes on that. Now, when we break it down to the 4 hour and the 1 hourly chart, we can kind of see what's going on right here. So check it out. Notice how we had this initial down move, right? It started on May 10th. We hit a high of 35,000. That's a good thing. We actually broke through a major level of resistance, right? So we should be happy about that. But then look at what happened following that breakthrough. We broke above 35,000 and stayed there for less than 3 hours. So that right there classifies as a false breakout. We broke above a major level, couldn't stay above it. So as we can see, the rejection was super strong. So all my sellers, I'm pretty sure you caught some good moves last week during this sell-off. Now, we came to a bottom level that we had actually reached before. As we pull up our support and resistance levels, we can see that this level right here actually used to be the bottom of the purple zone that really hadn't been touched since the beginning of April. So that just goes to show you how some prices can always come back into play no matter how much time goes by. So we hit that level, right? And then look what happened. We bounced all the way up. The bulls were thinking that, oh, okay, uptrend is back on point. Everything is going normal as it usually does. But look at what we ran into. We ran into our lower low right here, right? So this is the same point that we were seeing on the double chart. This was the lower high. Now we're just seeing how that lower high was made. This lower high was made on the smaller turn time frame by a double top on the lower turn time frames. So the lower time frames lines up with the bigger ones, and they're all bearish candlestick patterns and negative activity. So coming off of that double top, what do we see? We see prices continue back down to what used to be resistance. They had one last pullback, and then from that point, they was just out straight down moves. And now we're at a point where we're kind of just consolidating, letting everybody digest what just happened in terms of the selling that was in the market. So based on all of the factors that we've covered so far, we have to expect that prices will probably come back down and test these lower prices at 33,400. So now, since we're seeing a lower high on the daily chart, we're seeing the double top on the hourly chart and then lower lows and lower highs on the hourly chart, we want to look for those selling signals, because these might be some times where we can catch, maybe a couple 100 points on the Dow Jones, but just a short trade. That's why not only do we want to go short, we want to hold it for a short time, in and out, because the Dow Jones can bounce back on you at any time. So because we know that it's a selling market, we just look to the left. We find what used to be previous lows. What used to be previous lows should now act as resistance when price gets back up to them. So notice how on this candle right here from 4 o'clock, the top wick, if you follow that over to the left, lines up with an area that used to be a last low from May 14th at 8 o'clock. And it's tested that level about 3 times so far, hasn't been able to break it. So that could potentially be a level that we look to short from at 34,000, which is also a major psychological whole number level. Anytime you hit 1,000 on the Dow Jones, it always matters. So with all of that being said, I have to lean more towards the long side on this pair until we see higher highs and higher lows. That's my analysis. I'm sticking to it, and that's how I'm rocking it out so far this week. So let's go ahead. Let's pass it over to Darren. Let's get his thoughts on this one.
All right. So first, I need to take off the volume for me. Go to the weekly chart for me, and bring up my moving. So go to the monthly real quick. Okay, so the monthly is still letting me know the buyers are in control. The only thing that kind of worries me is that wick that's sitting at the top. But then that may be considered a neutral candle when the body forms exactly in the middle of a candle wick. And it has really no form, when I say form, it's not formed at the top of the candle wick. It's not formed at the bottom. It's more like in the middle. So when you have that type of candlestick that forms, that usually means whatever direction was in control before is still in control. So if that is true, then we would have to say that the buyers are still in control. So drop down to the monthly. Okay, the monthly. Still, the 7 is above the 65. There are no lower lows or lower lows or lower highs that's forming to let me know that the sellers are trying to step into the market. I'm now seeing that red wick right there that kind of formed at the candle before where we are right now, and that kind of almost looks like a hammer. I'm not sure if it really would consider it a hammer, and I say it's not a hammer because it's so much of the top of the wick that's forming. If it was like less, go to the top of the wick, candle. If so much wick wasn't showing, I would kind of say yes, this is a hammer type of candle formation. But being that the wick is sticking up a little bit more, I will probably try to rule it out as a hammer. So still, no higher highs or higher lows. Well, no higher highs and higher lows have been formed, but no lower lows or lower highs have been formed. Drop down to the daily. So the daily lets me know that by the time I got here, that whatever decision or that I've mentioned the whole time, which was buys, I'm gonna have to stick with the buys. I kind of like the way the market came down and hit the 50 moving average. Just the only thing that still worries me, like the pro of it, it came down perfectly to the 50, but the con of it, it formed its first lower high, and this is on a daily, so we probably could be looking for another push down to retest that double bottom, or we can probably just stay in the direction we're in and kind of play around in the consolidation zone and just push up. So right now, before I even go any further, I would think I would stay with the buys on this one. I would probably try to wait for price to come just a little bit lower, just so I can capitalize on it. So that would probably be over to the last lows. Yep, so those lows at the bottom down there, come up with just a little bit. Yeah, right there, just around there. So the 33,825 would be a good level. That if we can stay above that level, I would definitely look for the the long. But if it comes down to that level and breaks completely below that level, I would try to begin to start setting up for shorts. But all in all, I'm only trading what I'm seeing, not what I think is going to happen. So I would be looking for buys to happen. And honestly, we would really need a higher high and a higher low to happen before that happens. And that really didn't happen. What happened was a lower low and a lower high. So what price is that at the top of that? Where we are right now, the top. No. Where we are right now, the top. Yep. 34,440. So I'll be looking for that area to pretty much be broken. Bring it down just a little bit, just a smidgen. Yeah, okay. I'm just trying to see, does that high line up with that high over here to the left? It's just a little bit lower. Oh no, when you zoom in like that, no. You can see what high I'm talking about over here on the left by the 12th. Yep. I was looking for a price that to kind of line up, but actually it kind of lines up in its own weird way because it did form up above that line, but this was be considered a hammer candle, the one that flipped over that price, but because the next candle was down short, so I would be quote unquote, we did make a so-called break on it, and this was the retest, so to say. Yeah, but let me not get rambled in my thoughts. All right, so let's drop down to the lower time frames and let's see some good entries we'll be looking for. So 34,440 was the high area we're looking for it to be broken up higher, for us to want to hop in for a buy. Also, where we are right now actually lines up with these lows over here, right by this long candle. Yep, so right there. That wick right there, so it looks like it bounced right off of that area and could be possibly find some rejection. But honestly, I think it's going to come down to the high over here by the 13th. So bring the 13th, yep, right there. So I think I'm looking for the price to come back down to that level. And that level actually lines up, if I was to put like a box, unhide your signals. So yeah, that line falls right in the middle of where I'm talking about, the 33,800. So like Tiberius said, we're just pretty much now waiting for prices to come down to that high level at 33,800, and then I think we would have to begin to start looking for buys. So all in all, Buys is what I'm looking for on this one. Let's flash over to the 5 minute before I conclude my analysis. Yeah. Yeah, I would have to kind of say we're still in a retracement level, and I feel like this is kind of forming like a head and shoulders. And to me, it's not forced; it's there, but you just nope, go up, go to the top. Yep, that's the head. Now come over to the left. No, slide down. I mean, don't go over. So go back to where we were and slide down. No, I mean not all the way. Go candle by candle. Right there. Go see that little high where it hits the 60 or the 50 moving average. But then I would say maybe not that, or go over to that little red candle right there that's sitting right on the 20. Nope, go to the left. So follow yep, that high right there. So I'll be looking for that to be the shoulder. Zoom in a little bit, bro. Leave me alone, fam. Leave me alone, bro. I promise you, just leave me alone. So I'm looking for that red candle to kind of be the left shoulder, and I'm kind of looking for rejection where we are right now to continue all the way back down to the bottom of structure. So I'm pretty much looking for prices to reject right here and stay below this area, which we are, and then just to continue lower. And I'm gonna point out also one thing. You see where that candle, the top of that is? Go to the bottom. Where the candle, yep. No, go over to where that, yep, right there. That bottom candle, wick. And that one is pretty much what I'm needing for confirmation to bring it back down, all the way down. So, and we're actually look like we're pushing through that, and that would actually be considered the break of the neckline. So, short people, I think, all in all, you can possibly, if you're not in already, I think you can possibly get in, but you would definitely want to wait for it to come back up and retest the next quarter level at 33,975, which it is right now. Or what's the next quarter level above that? We'll be looking forward to retest that. So 34,400, yep. So we're looking for price to come back up to retest that, and then we want to bring it back down to structure. So short for the short, I'm having the short setting up for the long. So the short term, I'm looking for the short to come back down to structure, but ultimately I'm looking for it to set up low enough for us buyers who want to take it higher to make higher highs and higher lows. That is my analysis.
All right, there you go, good people. That right there covers US 30, aka the Dow Jones. So that brings us to our next pair that we have on the docket for tonight, pair number 2 out of 4. So let's go ahead and move on to dollar Swiss. Now this pair has also been making some very nice moves too. This pair is back trending once again. So let's break that down a little bit and see exactly why that's happening. So let's start off with our top-down analysis. We want to be able to make sure that we understand the long-term picture so that we can understand what we look at on a daily chart, the 4-hour, and the 1-hourly chart. So as we can see, if we go all the way back to April of 2019, that's where we had our most recent market structure top in terms of the long-term picture, and that was way up in the dollar area at $1.02. From that period, we made our way down to a low of 88 over the past 2 years. So that tells us right there that the downtrend is strong. Now, we had this initial up move at the beginning of the year, but ever since April, we've been in a straight downtrend, and we've actually been seeing more continuation. And if anything, if you look at the chart and take a little analytical peek, we're pretty much on our way right back down to this bottom that we made from before. If anything, we're probably going to break it, but we don't want to look too far in the future. But we just want to look at that weekly chart to give us an overall understanding of what we're seeing right now. So if we break it down to the daily chart, let's zoom in a little bit. This market is following market structure as it should when a downtrend is happening. Remember how we always tell you that in a downtrend, you want to see prices come back to retest what used to be the last lows. You want to see prices bounce off of those levels, show some type of bearish candlestick formation or bearish price action. And once you see those things happen, then you can be confident in taking that short trade, because now you have all of the signals on the chart to show you what you need to do. And if you take a look at dollar Swiss right here, that's exactly what we're seeing. So let's start at this most recent top that we had at May 5th at around 91.50. we pulled all the way down to 89.92. So really, we can round that up and call it 90. So we went from 91 and a half to 90 even. And look at this pullback. Well, this retracement right here. Look at how far the prices retraced. They came all the way back up to what used to be the last lows, following market structure perfectly. So if we look at where we're at right now, we've actually broken past this low that we just made. So now that we've broken past the low, we should expect prices to come back and retest that level. That's overall what you should expect out of a pair like this. But also you want to take into account that every market is not the same. You don't want to just follow that rule blindly in every situation. So for dollar Swiss, what we're seeing right now is an area where this might actually hold up as support, because this is also the 90-cent level. And I've told you guys a million times on a lot of our old analysis, I'll tell you again that over the long term, dollar Swiss has a tendency, at least since 2015, to trade within $1.90. It'll go all the way up to $1, might go a little bit past it, and then come all the way back down to 90 cents, go a little bit below it, maybe down to 89, 88, and then somehow make its way all the way back up to $1 eventually. Now, this takes a course of months or years, so it takes time. But remember, 90 cents is very important. There will be support down here in some way, shape, or form. So I think in this scenario, we might be better off looking for prices to come back to the top of what used to be this previous breakdown candle to the downside. As long as prices stay below there, I think that the short trade is still valid. And if anything, if we want to get the best prices, that's actually where we should put our orders. Now, it gives us the least probability of it being hit because it's so far away. But if we can get the short trade at that level, it'll be perfect for our risk to reward, especially looking at the fact that we're in a downtrend. So before we move off the daily chart, let's just get that price real quick. So the top for this candle is 90.35. So we'll keep that level in mind. Now let's go ahead and break it down to the hourly chart. Let's see what we have going on. So yeah, this is basically just the down move I was talking about before. Very solid, a lot of momentum behind it. It looks like, it's very similar to US 30, where the sellers are kind of just waiting around trying to digest what just happened and determine whether or not they want to play the long move, they want to play the short move. If anything, prices should come back up to the top of this consolidation zone at 89, 87. If you want to give it a little bit more room, you could really call it 90 cents. That's what I would wait for. If you want to be aggressive and short, you could short from those levels, 90 cents or 89, 80, 89, 85-ish, anywhere within that range if you feel comfortable doing that. Me personally, I'll probably wait for 90 cents because I like that price. And if anything, you want to be real aggressive, take it at 90.25. That's a good quarter level that you can go upon and look to take the short trades from. We have our most recent low, our next one at 90 cents, so take that into consideration. And our most recent one is at 89.85. So use that information to fit your strategy, how you like to trade. I just wanted to come on here and tell you guys, give you an update on the overall downtrend. We know this pair has been moving down for, the past 2 years. So this right here might be the opportunity to maybe catch a big swing trade. So keep this pair on your radar right here. So that wraps up my analysis. So let me pass it over to Darren and let's get his thoughts on it too.
So, I think when I look at this right here, just simply on the daily, what I kind of notice is that it came down to 88, 87, right? That was like the beginning of the the beginning of the year, and excuse me, ever since then, we've been making higher highs and higher lows. Is that correct? Because we went up, we made this first higher high, and then we made the higher low. Then we shot all the way up again. We made a higher high and a higher low. Then we shot up even higher. But this time, when it can't try to come down to make its higher low, excuse me, I drank soda. Excuse me, guys. That it came all the way down and broke the previous low area it was supposed to find resistance. So I think, to me, that's kind of letting me know that up momentum was very, very, very strong. And it was strong enough to break the last area of the last high areas back in September in 2020. So I feel like that break of that high is kind of important to me because I feel like we can't flash by the fact that it made a higher high. So are we now looking for a higher low, or is the market is like, oh no, this is straight up V pattern reversal and we're gonna go straight all the way down? So I think being that we broke the previous low right around March, we broke that low and we never found any strength to come back up to retest it, that the down movement was so strong in that area and that high area over there, and they actually ran through it with such ease. There was like, looked like there was no struggle at that area. It looked like it just blew right past it. So I think, in my opinion right now, like, I do want to go long just because it broke and made those higher highs, but just the fact that it blew past that area at 92.75, excuse me, 92.275 or 2650, or pretty much where that low lines up with that high over there, and then there was no retest. So in my opinion, just off that, I think I would have to just take the short seat and patiently wait for the buyers to step back in, because I just feel like prices need to become just a little bit lower, just for us buyers to want to hop back in. But it's just like it came all the way up to 94 and then turned all the way around. Why at 94? But let's not get ahead of ourselves. Let's go to the monthly and then unhide my moving averages. So with that conversation, so pretty much that conversation was about why was that previous high over there broken through, coming down so strongly with no retest, but at the same time it made a higher high. It made an all-time high, not all-time high, but a high area that it took us to get for a little bit. So that's just what confused me. So right now we're to see that the 20 is below the 50. Excuse me. And the market came up perfectly, hit the 20 moving average, and it looks like it found some resistance up at the top, and now could be looking like to come down. Being that we just broke that high over there to the left. No, you went too fast. Go back. Yep, that high right there. Being that we kind of broke past that, I'm either waiting for a retest back at that level to come all the way back down to around 80 or 75, or I would try to use that bottom area, those bottom candles, the bottom of it, not the bottom candles, but the bottom of that candle, and use that as an area for a retest to come back down to the bottom of structure. So that's probably, I'll be looking for an area right around 90.022 or 25. So the bottom of that candle and the top of that candle. So out of this, we know this 20 is below 65. The bears are in control. Drop down to the weekly. Kind of not really the same story, but this is pretty much is a better picture on how the market broke up past that high area little after June. We broke past that high level. So point to that high level. I think it's at 92. Go over to the left. Yep, that right there. Being that we broke past that high so with ease with no retest, I would kind of have to lean on the side of the short and understand that the overall trend is down. Go to the daily. And this paired, even watching it with Tiberius, he's been watching it all our entire collegiate years. We graduated 18, so all 4 years before that. And to me, I've always noticed that it was always in a down moment. I never really seen it was in a constant. I'm not gonna say it doesn't go up, but every time I've seen it, it was going down. So, and then the daily kind of shows the complete confirmation that the bears are in control, and that now we should be looking for areas to hop in for the short. And I think that this area over here by February, this high, yep. And I feel like that if I was to drop down maybe just a little bit lower, that would line up right on top of the 20 moving average. So unhide your signals. So yeah, that green line is exactly where I would want to go. So drop down to the 2 hour. And like Tiberius said, if I want to be a little bit more aggressive, I can get it higher at a previous high area. I can probably get it, maybe, nah, that would actually be a little bit silly. So right where this line is at is actually the perfect entry right there. So 90 cents is pretty much the price we're looking for in this pair. If we can't get it exactly at 90, I think that you can probably get it at the bottom of it, like the complete bottom of the structure over here. Yep, you can get it there. So maybe a box from there to like where that 90 cents is. That would be a good area just to give people a little cushion room, and you don't have to get in exactly at 90. And if you don't get in at 90, it's wrong. I always try to encourage zones because that gives you to see like these are all the prices, and whereas a line points exactly to one price. So a box would be from the bottom to that line, and I would bring it across, and if it stays below there, I would stay on the short. And I really don't see no buys right now, and I can't go into any buys until the high at 90.80 gets broken. So until that up there gets broken is probably when I begin to look for a long play. So go to the 5 minute real quick. I want to see how high is high and how low is low. So yeah, we are at low prices as far as like where we are, like the order of the prices 89, 700, whatever. But I feel like they're actually at exactly at highs, if that makes any sense. Yes, we are at low area of prices, but where we are exactly, it's lining up with high where the market was a high in one point in time. I think that makes a little bit more sense. Does it?
Yep.
All right, so yeah, yes, we're at lower prices, but where we are exactly lines up with highs that this market used to be at or struggle with. So we're pretty much looking for, or to piggyback off of these highs, to hop in for the sell, because we want to buy low, sell high. And if it actually break above these highs, we would want to probably reconsider hopping in for the short and just be a little bit more patient and let the trade come to us. So if it breaks this high area, I'll be looking for the next previous high, which is probably at 89,950, which is, yep, slide it over. So go to the bottom, yep, go to the little bit of bottom, right there. So I'll be looking for it to come there at 89,925. I'll be looking for it to come there, and then go for short there. But like I said, I won't go into any short until it comes to that level and has a complete rejection, meaning that the candle formed all the way below and I allowed the candle to complete and not just hop in the middle of the candle being formed. Because a lot of the times I catch myself doing that, not allowing the candle to completely form, and the candle, by the end of the time that candle was formed, it went against me, and I always, hop it in too fast. So my key for the wisdom is being patient and letting the candle completely form, no matter what time frame it is. If you can't wait for that hour, drop down to the 15, drop down to the 5 minute, but always make sure that you let your candles completely form. Go to the 15 minute before I wrap up. Hit that circle. Yeah, so I would actually put a zone right at the top area of the highs. Yep, right up there. And I would just be kind of waiting for it, see what the market does. So that's pretty much my analysis.
Okay. That wraps it up for us, you guys. That is US 30 and dollar Swiss. So that's the first two pairs we have for tonight. So let's go ahead and get into our next two. We have Darren coming on to break down some analysis. So let's pass it to him and let's see what he got.
Alrighty, guys. So I don't stay too far away from my babies. And for those, that was salty. For those of you who guys are new, my two favorite pairs are so far has been AU, GJ, but I've been recently looking at gold and I've been liking the way they've been moving. So let's see how this forms up. Alright, so this is gold. We're gonna just stay right on gold. So let's go to the daily real quick. Okay, hold on. Can you guys see my screen?
Yep, bright and clear.
All right, perfect. So, pretty much on gold, we've been kind of we created this zone which was a high prices in which the market has been sitting at or has had trouble in the past, and this is the trouble I'm talking about, the consolidation that every time it came to this level, it turned all the way around. So I drew a nice little zone across the way to kind of line up with that because we want to try to follow patterns and trends. That's pretty much what this is all about. So let's actually just go to the monthly and do the top-down analysis. So the reason why the market actually makes its turn at this area in particular is because the last time it came to this area, it shot all the way down. So whatever prices is between this 1770 and this, between this blue line and this blue line, whatever's between here, the market doesn't like, and for some reason it turns around. So we want to be cautious and understand that yes, we are in very strong supply zone. That there's a lot of supply, and in order to wait to get the demand up, we would need prices to drop down lower so demand could come in, and whatever the supply and demand method. So the 7 is above the 65, but we are at high prices in which it always turns around. We got to stay wary of that. But also what I have to point out is that the market actually came up and broke this structure. It broke this structure and actually came down to retest. But when it did, it broke I'm not going to say all the way down. But to me, I felt like I liked the way it came down and retest, because you would have thought it would have retested somewhere on the wick or even at the top of the body. No, it came all the way down where these lows were. And these two candles were just happily formed. It was just whatever happened in these 2 days was very strong. But all in all, these higher prices here were the ones they were staying at. That is why sometimes I flash over to the line chart, because when you take away the wick, this is kind of like what you see. And that's why I like to I do the top of the body, because sometimes the market doesn't either come down to the wick, or the wick is just not respected in which it formed or whatever. So you can pretty much see it came down to previous highs perfectly. So I say being that the market came down and hit this area perfectly, and the market had a chance to come back over the 7 moving average, I would have to be a little more patient, but begin to try to look for long setups. But I have to kind of wait until this high over here to its immediate left gets broken, because until this is broken over here, the higher high hasn't formed yet. But this can also be, if you look at it just over here from on this side, this is 3 ascending peaks. I think could it be, Ty, where this is forming down, where it's lower lows and lower highs coming out of an up move? 3 descending, I mean.
Yep, it could be.
So if the prices stay below this high to the left of it, I would have to kind of wait for prices to come back down to this blue zone and look for this blue zone to be a good buy zone. But for the immediate decision right now, so being that I want a buy move for the long term, like I always say in all my streams, in order for it to have a good buy, you need to have a sell. So I'll be kind of looking for the sell to happen to set up for my buy, in which I really want. So actually where this little red line where it's at right now, I don't know what is that red line, but I'll get to it when we drop down lower. So pretty much, yeah, the 7 is above the 65, which means that the bulls are still in control. But no higher highs and higher lows has been formed. Higher lows and higher lows has been being formed. So we have to kind of be patient and let the trade come to us. So let's drop down to the daily real quick. So the daily kind of puts the confirmation on it, on that the overall trend is up, and that we would need to begin to start looking for moves for the long side. So in order to hop in for a nice buy move, we would need a nice sell move. So I'm looking for prices to come back down to these highs over to this left, in which the structure was broken, and then I'll be looking to take that to the upside. But let me bring this drag this box down, make it a little bit smaller. So yeah, so let me drop down. So pretty much, yeah, by the time I got to the daily, my decision is I'm going for the long. But in order for me to go for the long, I would need price to come down low enough to satisfy my desire to hop in as a buyer. So I want to buy low, sell high. So being that the prices are sitting at high prices in which the market was before, I think for the short term, I would look for a short. I would capitalize on the short, because if that short happens, then I would know that my up move, in which I'm planning for the long term, is actually in motion, and I'm just pretty much being patient. So I would actually just take it from where we are right now, break of this red zone, take it back down to these highs, and then look for prices to find support down here, and then I'll be looking to go long. So all in all, short term, I'm looking for prices to come down a little bit more, just because when you drag the prices from where we are right now over to prices in the past, we are sitting at quote unquote high prices in which the market was at before. So we want prices to come a little bit lower before we decide to hop in. Let's see if there's anything else I need to say. So yeah, I like the way where this red box is. I probably should make it just a little bit smaller. I just don't want to mess up the idea in which I'm trying to convey. That joint is kind of long, low key. Pause. Let me go to the daily. Okay, so let me see if I could just make it. Okay, that's a little bit better. So yeah, I'm looking for prices to kind of break through this bottom zone, and maybe have a retest, and then continue to take it down to these previous highs. And down here is where I'll be looking for a nice demand zone to want to hop in for a buy. So let me get Ty's idea. I know I've done rambled on.
All right. So for gold, let's take a look at the daily chart, and let's look at it from a clean perspective. Let's see what we get. All right. So the first thing that stands out for me when I look at this chart for gold, I remember looking at it last week, and I was looking at how over the long term it had been in an uptrend for a very long amount of time. And if we go most recently back to where we were like around mid-July about last year, that was when we actually started the downtrend once we hit the top at around 2080. Now ever since we got to that point, we've been moving lower consistently until we made this double bottom. Ever since we made this double bottom, we've been in an extended period where we've moved back up to the upside. Now keep in mind the overall trend is long. Now I remember last week I was saying, because we were talking about 3 descending peaks last week, and pretty much we were coming up into an area that could be the third peak, as D was talking about a few minutes before. And in my opinion, that level for sure is probably anywhere between 1880 and 1875. That's about $10 away from where we're at right now. So we're pretty much at that level already. So now we have to think, what's the potential for the uptrend to continue? What's the potential for the downtrend to continue? I think if you also look at the overall macro picture behind gold, gold is a hedge that people use in order to balance their portfolio. So for the most part, we know from a macro perspective, gold has a tendency to increase in value. It's been doing that since the beginning of time. That's just what it does. So you have to consider that too. And also looking at the technicals, we're coming into this major level at 1875. I think if we break back above it, then that's actually a downtrend line break. Because I think if we draw a trend line from the top of this area all the way back down, not only on the daily, but even on the weekly and the monthly, all of those areas form sort of a rising wedge, I would say. And when prices break above that area, you can pretty much be spot on for the long trade. So as you see, Darren just drew that trend line perfectly on the chart right there, and that shows you exactly what I'm talking about. Because once prices break that level, the uptrend is back on. We just have to wait for buyers to be able to do that. And that comes at the critical level of around 1875. If we can see that price level get broken and see it get retested and act as support and stay above that level, I think that we should be good for the long prices in the future. But on the flip side, if we're not able to break through that level, the sellers could step back in, because that right now, for the moment, is market structure resistance. So it could hold up as that. So we need to keep that in mind going into the future. So right now we're at a critical junction. Depending on how it acts over the next couple of weeks, it could either be the start of the next leg of the uptrend, or maybe a continuation from the sellers that we've been seeing since July of last year. So keep those things in mind when you trade gold.
All right, guys, there you have it. Two analysis, different in its explanation, but all in all, pretty much along the same lines. We want to be patient, that we want to be understanding when it comes to gold and look at prices or previous prices in which the market was at before, to kind of understand what it's possibly going to do moving forward. So where we are right now is very critical. This could either be the break and the retest we need to continue up, or it's going to just follow suit like it has done in the past and continue all the way back down just to hit the uptrend line. So we will have to find out what the market does moving forward this week, this Thursday. We should definitely have an answer for that. So that's pretty much our analysis on gold. Let's go ahead and flash right on over to AU. AU has been another pair that I've liked. It's been coming along as far as like setups and following structure and structure that in which the things I've been taught, they align up. So AU, you can kind of see on this is kind of similar like gold. It's in a wedge area, but in this case, the market respected that downtrend line and made its way down. This can also mean that the market did hit the bottom of this trend line and now making its way up. So we have to make sure we pay attention to the entire chart as a whole, because I think this little bottom area in which it hit, I think that would be that quote unquote good enough, and it's now possibly coming back up to the top to retest this, and this could be either another area to hop in for a short to come back down to the bottom of the red box, or this could be finally that momentum it needed to break all the way out. But we would definitely want to retest at this high area where it lines with these previous highs before it continues to go up to that green line. So let's kind of look at this in a top-down analysis, because we never want to jump the gun. Let me unhide my moving averages. Let's go to the monthly. So like we said, this area where it's been right here, let me put this back. This area in which we were right here, which has been an area I've been talking about for a very long time, and it's pretty much the fact that it comes into this monthly zone and it can't find no momentum or any strength to try to come in and break these previous highs in which it has before, in which probably I think it's now forming lower low and a lower high on this side. So I kind of want to be, keep my eyes peeled on that. So the 7 is below the 65 on this one. It looks like pretty much the bears are in control. Let me drop down to the weekly. So the weekly, the 7 is above the 65 on this one. So I think, like I've said in previous shows, that anytime that the moving averages don't align as far as the higher time frames, I feel like I step out of those trades, because those are not my high probability trades. and I want to make sure I'm taking high probability trades only. And that, it's not a bad thing. I just feel like we just need a little bit more confirmation, and I feel like this could possibly be a confirmation right here that this was a fake out, and that anything that's sitting at the top of this area up here is very strong, and the market is now possibly going to come out of that area and try to make its way back down. So I think we're possibly in an area where we're looking for more down movement than anything, and I feel like we just need a little bit more confirmation as far as retesting some of the highs it was at before, or just pretty much breaking areas we're looking for it to break. So let's drop down to the daily. So the daily, let me hit this circle. So this daily kind of shows that, yeah, the market has made and formed out of this wedge, but it formed back down. So I don't like the way that looks. So let's kind of sit this up here, because that kind of contradicts a little bit what I'm saying. All right, so yeah, this is a little bit better. It came up, hit the top of this area, rejected, came back down here. Kind of did the same thing here. So yeah, I'm pretty much looking for prices to continue retracing up, and then I'll be ultimately looking for higher prices to hop in up here to definitely hop on board for the short, just because lower lows and lower highs has been forming, and no higher highs and higher lows has been forming to confirm the up movement. So all in all, from the monthly, weekly, daily, they don't align as far as moving averages, and that I think it ultimately means that the market is still retracing, and that I need to let the market give it a little bit more time to set up for prices to become higher, because I'm looking for, lower, because being that I'm a seller, I want to buy low, sell, why I keep saying low? I want to buy low, sell high. So I'm looking for prices to come to higher prices in which the market has been before. Once it comes to these higher prices, I would wait for rejection. I'm looking for wicks that form like this, and kind of push up and a push back down. So I think ultimately this 550, I think 750, I think would be a good area. So we want to stay kind of to the quarter levels, 25, 50, 75 in the round. So being that it hit the bottom of this moving average, this uptrend line, I think this will be that good enough, and now we should be heading up. But the market can do its own thing, and then it can actually come back down to retest that area. It possibly could be doing that right now, like, we're not going to go up anymore because we didn't hit this line low enough. But let's just only trade what we see. So like I said, being that we want the short as the overall trend, and that it's still retracing, the retracement for a short is buying. So I think we're definitely looking for prices to come back up just a little bit more before we decide to hop in for the buy. So let's flash over to the 5-minute really quick, and then I'm going to give my conclusion, and I'm going to pass it over. So pretty much, let's go to the 15 minutes, because I think the 15 minutes are over. So yeah, so pretty much I'm kind of just looking for prices to stay below the 77, pretty much where these highs kind of form. So let's see if I can draw like a little box. So if we can get prices to come back up to this green zone right there and find resistance, I'll be ready to step in for the short. But if it can't even come up high enough, then I would use these lows down here as also an entry down here. So between 77,850 and 77,950 would be a nice little zone I'm looking to head for the short. So conclude, short term, I'm looking for a buy. Long term, I'm looking forward to set up for the short. So Ty, tell me what you're thinking.
All right. So for AU, I remember this pair, because one of the things that really stuck out to me the last time we went over it was the head and shoulders that was present on the daily chart, because we have been looking at the head and shoulders for a long time. So let's make our way over to the daily and let's look at it from a clean perspective. Because one of the things that I've been noticing that's really been worrying me about AU, and it also kind of ties into your analysis, because you pretty much said, like, for the most part, some of the higher time frames show that it's a downtrend, but some of the more recent time frames show that oh my bad. Some of the recent time frames show that some of the uptrends.
You're kind of going in and out. Repeat that, bro.
Nah. Hold on real quick.
Yeah, repeat that. You just went in and out.
Nah, bro. When you mute it, it throws me off. It makes me think I'm going in and out. So then I pause and I'm like, wait, is my thing messing up? So then it kind of sounds like
oh, my fault.
See what I'm saying?
I gotta stay mute, so my fault. I'm going back to mute.
All right. So I was saying that on the lower time frames, some of the moving averages show that the trend is up. So that kind of ties into my analysis as well, because that indicates to me that we kind of got to wait and see exactly what the market wants to do, because we do have that downtrend line coming across the market, but we also have the uptrend lines that Darren drew from earlier. It's very similar to the pair that we just went over. Now, the only thing that concerns me about this head and shoulders, like I was just mentioning, was the length of time that it's been forming. It initially started sometime towards the beginning of the year in 2021. That's when we first saw that left shoulder area get established. Now, it's May. It's almost about to be June in a few weeks. So it's taking this head and shoulders about half a year to form, or even longer, depending on what we see going forward. So to me, that kind of gives me a little hesitation, because I think if a head and shoulders is going to happen, it needs to happen after maybe one or two shoulders. But we keep coming up to that level. So I'm thinking that maybe we have the potential to break it, but at the same time, I can see us still going down from this level. So I still feel like, for me personally, I need to wait a little bit. I think the overall trend is still down a little bit, but I wouldn't be surprised if the bulls took over. So I think while we're waiting for the sell move to happen, like Darren said, we could expect some long moves, because if we break it down to the hourly chart, we can actually see some support levels kind of being held up a little bit.
Yeah, so there you guys have it, man. So we're going to be patient on this one, and we're going to let the trade come to us. So recap, we're long-term going short. We're long-term going short, but short-term we're looking for buys to happen to set up for the short. So that is my analysis for AU. So those are my two pairs for the night. I know we're definitely going to piggyback off our exploration section. This is our section which we knew. For anyone new, this is a section that we definitely added to our program, because we wanted to give a chance to not only talk about Forex, but we can give you guys an understanding of everything that the financial market has to offer. And that we're not only going to go over Forex, we're going to go over stock, we're going to go over mutual funds, we're going to go over options, futures, NTFs, just anything you can name. We're going to try to cover it in our show. And if there's anything that we possibly missing or you want to hear us talk about, definitely shoot us in our personal emails or our business emails. You guys should have it, thebisonTrading2018@gmail.com. Definitely let us know what you want us to cover. So, what did we go over last class? Was it
Crude oil.
Crude, yes, crude oil. We talked about that. What was some of my notes that I had for that? And then we talked about, what was it? APAC. Was it? PAC, I think. But pretty much we were talking about oil, because as you can see, the prices of oil has been going skyrocketed. And we wanted to give you guys an understanding on how crude oil is moved, and how prices are determined, and what countries are involved in this committee. And that when you look at not only the technical analysis, what is it called? The fundamental analysis, you have to also pair that with your technical analysis. So your fundamentals is understanding what crude oil come from, petroleum, and what organizations that they are part of, because that's very important, because you have to know based on what organization that they come from or are part of, they have to follow certain rules that they binded with a contract. So you definitely want to find that out, do some research. You want to watch the news and see what the news is talking about. And for anyone who didn't know, the reason that the prices of gas is definitely went up is because I forgot what this pipeline is called on this East Coast. But pretty much it was hacked by hackers, and it pretty much shut off the supply of gas. And I think, like I said in last episode, gas is all run just like economics, the supply and demand factor. If there is a huge supply of gas that's hard to get rid of, and you guys are sitting on a whole bunch of amount of it, the best way to get rid of it is to lower the prices. The lower the prices, the more the demand will begin to happen. People will be filling their cars up. But opposite, when you don't have gas and you're running short and resources are scarce, you definitely want to increase prices, because when your demand is high, you want to increase prices because, when demand is high, and your supply is low, and then so that's vice versa. So just to recap, when there is a lot of gas, you want to lower the prices. When there's not a lot of gas, you want to raise prices. So understanding that, doing your research is all intertwined with that. What was the symbol that we used last week? It wasn't it like C?
Yep.
That was pretty much your
CL1.
second. CL1. That was pretty much your section, but my mind was pretty much going over the fundamentals. So keeping that in mind, that's just a recap. Understanding what crude oil that you're invested in, understanding the business that it's in, because it's just more than just looking at a chart. A lot of those things like commodities, they'll run like a business. So you want to make sure you pay attention to the news and things that's going on. You want to be very alert on what's going on in this world, because a lot of things can definitely be told and are in front of you, and sometimes it's some of the best information is right in front of you and that you don't even see it. So you want to keep your eyes very peeled on certain things when it comes to commodities such as gas, oil and rice and gold and those things that are tangible. So it's much more than just the technical. So I'm definitely gonna pass this over to Ty, because he is definitely the professional when it comes to understanding how, and also those commodities are turned into futures. And futures, I'm gonna let Ty talk about that, but futures is pretty much locking in a price for a future date. So if you know that this is a low enough price you want to lock in, you would lock in on a futures contract, and that contract is going to promise you that amount of gas at that price on that particular day. So that is all very important in what's going on in the world. So I'm definitely going to pass it over to Ty. He's going to let you know the symbol on crude oil, and pretty much how it's turned into futures, and how futures is even measured, as far as contracts and those things of that nature. So I'm not going to hold him up a little bit. So go ahead and just kind of recap on the crude oil that we were talking about last week.
All right. So when it comes to crude oil, Darren just laid the foundation for you guys in terms of fundamental analysis, because when it comes down to crude and commodities, you have to focus more so also on the economics behind it. So that goes back to supply and demand. You have to understand what's going on in the world, because commodities, they aren't certain things that could be pushed around like a stock or maybe a different forex pair. Those things can move just depending on how people feel. When it comes to commodities, those are going to move based on how producers and distributors and suppliers and buyers feel. Supply and demand in its most purest form. So in terms of understanding that, when you know that the supply is low, more than likely, as Darren said earlier, you increase prices, demand goes up. So that's why you've been seeing so much of an increase in the oil market so far. If you go back, if we're looking at the chart right now, if you can go all the way back to, let's fit this chart in here. You can go all the way back to 2020. If you guys don't know, the futures contract actually came down to $0, and it traded in the negative for one day. So that's something that's unprecedented and has never happened. But you can see coming off of that level, just from a practical perspective, if the price was zero, it's only one way it could really go. And that's the only way that it's been going since that time period. If we take a look at the chart and apply technical analysis to it, we can see that we came out of that level. We made a higher low on April 28, 2020, And from that point on, we just been trending higher, trending higher. The uptrend has been fantastic, and it seems like we're continuing to make higher moves, but we're coming into this major level of resistance right here. So depending on what happens with crude oil, this right here will be an important price. So we'll have to see something happen this summer in order to make this uptrend continue. But based on the way that the chart has been moving, we have to expect that yes, this will act as resistance for a short time, but eventually prices will break past 66. And all we have to do is keep our eyes on that. So now that you understand the economics behind crude oil and you understand the technical picture behind it, you can put those things together as a trader or investor and make a decision for yourself based on what you research and what you find, in addition to what we just provided for you tonight. So that's how we want you guys to take this information that we're giving you and use it. Use it in an effective and efficient manner in order to get some results out of it, because that's what we want you to do.
All right, guys, there you have it. A full breakdown of crude oil. And this market, financial market, has so much to offer. And I feel like,
So I think for the most part, that covers it up for crude oil. So we'll pass it back to Darren.
all right, I was definitely mute and I said a whole conversation. So there you goes, guys. And, I want you guys to leave with, something that you possibly didn't know. So that is why we added that section, because, we wanted to give you guys more than just the Forex. We want to be more like a financial news and educational outlet for people who just can't get that understanding or get to that resource or whatever the case may be. We want to be that educational point for, people who don't have the privilege, So there you go. That's crude oil. So if you guys have any questions about that, man, please shoot us any emails in our Gmail account, bisontrading2018@gmail.com. Please hit the follow button. Tell a friend to tell another friend to please hit that follow button. We enjoy everyone who pulls up tonight and watches our educational piece every day. We love you guys. We're going to actually start doing little giveaways and contests, man, just to show our appreciation, man. Like, a lot of people have been down with us, man, and we love that, man. And we just want to encourage everyone just to get a friend. If they're interested in Forex, man, pull up to the Bison Trading Show. And if it's something they don't understand, man, we'll definitely, go over it or answer any questions that they may have. So let us know. So with that being said, you can definitely hit me on my personal IG at I'm the D Guy, at IMDGUY, or my business IG at Pearl_Financial_LLC. If you can shoot any questions, I love to hear from people who watch our episodes in our class, or you can reach out to Ty and his links at.
You guys can follow me over both on Instagram and on YouTube under the name Ty Trades Futures. On Instagram, make sure you check out my Trade of the Day series. I break down some trades that I took. I tell you what I learned from it, what made me take it, what I saw in the market that led to that, and I give you the whole detailed story behind it. So make sure you check that out. Also, check me out on YouTube. I'm streaming on there tomorrow morning, 9:15 a.m. So make sure you guys tune in. Let's trade some futures. And, of course, make sure you follow our business page, Bison Trading Show, on YouTube. We have a growing collection over there, and we want to make sure that you guys get all of the content that we have to offer to you, because we do more than just Twitch. We're all over the place. So make sure you tune in, follow us on all our platforms, and we'll be glad to see you happen.
All right, guys, there you have it. So I love every one of you guys who pull up every every Tuesday and Thursday, and even our Friday's episode, man, that means a lot. So I'm not going to take your ears off anymore. So anyone who knows and been watching the show should definitely know my next line. Ty, take us out of here respectfully.
All right, good people. Thank you for tuning in. We'll see you Thursday, same time, same place, 9:35 Eastern Standard Time. Bison Trading Show live, man. Let's get it.
Grr.